Rohit Srivastava, founder and market strategist at India Charts, joins us this morning. Rohit, good morning. Thank you so much for your time. What are you making of the mood on markets this morning? Is it just a nifty expiry because it's Tuesday and hence the selling pressure? Or is there more to read into it, especially Donald Trump's latest trade sort of remark on India, saying that India is dumping rice on the US, making the possibility of that all-elusive trade deal even more further distant than what it is now?
So the trade deal has been an overhang since July. However, markets did manage to recover quite meaningfully since October, and we almost touched the all-time highs. What has happened then is we've actually not surpassed that as far as the main index is concerned. But more importantly has been the weakness that we saw initially only in the small cap indices. But yesterday, that started to spread to other parts of the market, including the mid caps. We are still not seeing that level of weakness in maybe the Nifty or Bank Nifty. So it's a little early to say whether it's going to be a much more broad-based sell-off or only contained within the small and mid-cap space. But the next 2 days are going to be important in making that judgment. At this particular level, the Nifty is at a very good support, which is between 25,800 and 25,770. My sense is, at least for the day, it looks like that range will hold. You might potentially see a bounce back from there. And what we'll be watching for is whether that bounce manages to show the strength required to continue the upward trend or not. Because if there's any failure, then that is when we'll say that it's shifted from the weakness that we saw in small and mid caps is starting to show up in large caps as well. So that is the watch out for the next 2 days. But I think right now, Nifty is getting close to a very good support from where you can get a bounce at least in the day or two.
All right, a bounce expected hopefully in a day or two. I'm continuing to look at the banking stocks. You mentioned the BFSI space. I'm looking at the charts right now. We've seen that on Friday, the RBI did go ahead and give that 25 basis point cut. But yet we saw yesterday, especially in the second half, banking stocks had taken a beating. Even today, they're opening week. Now, tomorrow, India time, in fact, late night tomorrow is going to be the big FOMC outcome, which is likely to come through the week. Is the Indian banking space likely to get impacted by the actions taken by the US Fed?
Well, in a positive way, you see, rate cuts are going to be positive for both global markets, and it helps the Indian policymakers also continue with the rate cutting cycle that we are already in, which is actually good for interest rate sensitive sectors like autos, banking, metals, and could be eventually even for real estate, but it's not yet there. The main issue with rate cuts in India has been transmission, which is what the RBI governor mentioned both in the previous policy meeting and in this meeting. Last time he didn't cut rates. He said we need transmission. This time, though he's cut it, he said we need to focus more on transmission. So it's essentially, the idea is that when banks need to cut rates, they need to be able to manage their spreads, which means that their cost of borrowing also needs to come down at the same pace at which rates are coming down. That is the only risk. Otherwise, lower rates lead to more business, and that is the positive side for the banks.
All right. I'm looking now at the auto space, and again, a rate-sensitive, rate cut-sensitive auto segment. Do you think at this point valuations are conducive for long-term investors to dabble into some auto stocks, especially the homegrown ones, simply because now the rates are eventually going to get transmitted and they are going to be cheaper to get loans? In addition to that, of course, the GST relief and the year-end discounts likely to come, towards the end of December. Do you think all of this augurs well to pick up some auto stocks at the moment, given that we've seen few days of cuts on the valuations?
Yeah, I would think so. The auto index would have support close to around 27,150. That's the Nifty auto index. And I think close to that level, we should be thinking that it's probably bottoming. We have seen the auto index also outperform in troubled times, not just now, but also when you had the 21-22 correction. That time also the auto sector did better than the rest of the market. And we are seeing the same trend now, definitely helped by government policy, which already means that, given the festive season sales, you're going to get good numbers in January. So there's a reason why the auto sector will hold out better than many other parts of the market.
All right. Talk to us, Rohit, also about the energy space, because you're seeing Reliance Industries is down more than 1% in trade. ONGC is also down about 0.5% or so. And there are some reports about oil prices likely to fall below $60 by next year. That would be good news for India's inflation and India's overall trade deficit. But for stocks like Reliance, could that be a problem?
Not a big problem, but definitely puts some pressure. But it does help the oil marketing companies. So it's always this back and forth between, marketing companies and refiners. But eventually, Reliance has managed margins and spreads pretty well over time. I think oil prices, there has been a case where maybe it goes below. We were below 60, so does it go to the lower end of that range, to the $50 to $53 range? But that would be only the last sell-off that you probably get in oil. My sense was that it would happen probably when a ceasefire or some kind of a deal between Russia and Ukraine end up happening. That is the point at which you could see that downward reaction on oil. Otherwise, the downside is probably limited. Because there is a point at which producers would not want their prices to go below, and that's when they would be forced to hold back on production. But so far, we haven't seen production cuts, and that's why oil remains at the bottom end of the range.
All right. And finally, I'm also looking at the Indigo stock this morning. Finally, does it seem that troubles at Indigo seem to at least be ebbing out, if not completely? One may not expect a complete revival immediately, but at least the troubles seem to be ebbing out. And the kind of corrections that we've seen and the kind of selling pressure we've seen on the Indigo stock over the last 5 to 6 trading sessions, it seems that today, with a flat second decimal point correction in the Indigo stock, and the commentary coming in from Moody's, does this mean that Indigo is unlikely to bounce back in the near term? Or would you suggest that perhaps, the 65% market share is not going anywhere and this could be a good valuation for investors to pick up Indigo?
So there are pros and cons both, but if we take a technical view on the Indigo stock, it's fallen for 6-7 consecutive days. We would think that it's very, very oversold based on the RSI indicator, and that typically calls for a bounce. Now, if there's any commentary even related to the airline resuming its flights, that would be a positive. The longer term question mark would be as to the impact on margins, profitability of getting in more pilots, the new norms, and how does it really impact the overall business. So that is something we really need to crunch the numbers on. It would have a medium-term impact in terms of how the growth profit dynamics move. But once the airline is back on and flying, and it's not a case of shut down and going out of business, you will find that the stock bounces back from what looks like a very, very oversold condition.
All right. And finally, before I let you go, of course, the all-important FOMC, which commences tomorrow, and rate decision through the week likely to come out from the US. The IT sector is likely to be most impacted when you talk about business coming to Indian IT companies. What should the strategy be for investors this week after the US Fed has announced its rate decision?
So very near term, you have seen outperformance of the IT sector relative to Nifty over the last 2-3 weeks. That outperformance could continue for a while. So there is a trade in IT. I think I mentioned this the last time that there's a trade, but I don't know about long-term investing. And that trade might not be over because we are not completely seeing a full-blown rally yet in the IT stocks, but they're holding up much better than the rest of the market in this turmoil. And so I think they will still continue to do well into the year end.
All right, Rohit Srivastava, thank you so much for your time and for sharing all those inputs here with us and with all our viewers. Pleasure having you with us on News9. Moving on now, the IPO of home and furnishings brand Wakefit Innovations opened to a modest response on day one, with just 15% subscription recorded on Monday evening. According to NSE data, the 1,289 crore rupee issue received bids for just 55.1 lakh shares against the 3.63 crore shares available. Retail investors led the interest with 73% subscription, with non-institutional investors subscribing only 7%. However, QIBs, or the qualified institutional buyers, stayed on the sidelines on the first day of the IPO subscription opening. Ahead of the IPO launch, Wakefit raised 186 crore rupees through secondary market transactions from marquee investors including Steadview Capital, White Oak Capital, InfoEdge and Temasek-backed Capital 2B, and earlier secured 580 crore rupees from anchor investors on Friday. Now, the public issue includes a fresh issue worth 377 crore rupees and an offer for sale of around 912 crore rupees, which will reduce promoter holding from about 37% to about 37% from earlier about 43.7%. Proceeds will fund store expansion, equipment, lease, marketing, and general corporate needs. Now, founded in 2016, Wakefit is now among India's fastest growing organized home and furnishings brand, reporting 724 crore rupees revenue and 35.5 crore rupees profit in the first half of this financial year. Wakefit shares are set to list on December 15th.